Bolaget Electrolux rapporterar en minskande omsättning som kom in på drygt 32,3 miljarder kronor, vilket var strax över analytikernas förväntningar. Rörelseresultatet på 890 miljoner kronor stärktes mot i fjol och drevs av ett bättre resultat i Nordamerika. Den organiska tillväxten ska också nämna som nu landade på 4,6%. Vi är glada att ha med oss bolagets tredje Yannick Fierling och därför byter jag till engelska. Good morning and welcome, Yannick. Could you please briefly summarize this quarter for us?
Absolutely. Good morning, Noel, and good morning to all of you here. I think growth is one of the strategical pillars we do have in Electrolux, and we're very glad to report out a net sales growth of 4.6%, mainly driven by North America, where we have been gaining a significant level of shop floor spaces, and we have been expanding our presence as well in key channel like the contract channel. Slight growth in Europe and Asia as well, in a very subdued market here, and stable growth in Latin America. But I just would like to remind everybody that Latin America had a very big year in 2024, where we had a heat wave and where we were selling quite a lot of air conditioning and refrigeration. So strong result in Latin America as well for this third quarter.
I want to focus a bit more on North America because you're writing that the operating margin is increasing thanks to North America. Can you explain a little bit more on what you've been doing there?
Yeah, absolutely. I think we have been making consistent growth in the last quarters, and we have been improving as well our operating model in North America. We have a strategy which is short-term, but also mid to long-term, to take us on where we deserve or what we need to go, where we need to go in terms of operating profit here. Certainly, tariff is a very big factor on how we are moving forward. We have been leading price increase in this region. We're producing in North America. We are North American producers. Unfortunately, we were expecting a higher level of price increase from our competitors, which are importing finished goods out of Asia. We didn't see that. I mean, it's probably coming in the coming months when the tariff will be fully implemented in the region.
And speaking about North America, how would you say that the customer in North America is doing?
I think the market has been pretty resilient. The market has been flat versus last year. So we didn't see a significant market drop due to inflation. But once again, I mean, the full tariff structure is not implemented. It will be implemented or is implemented now in the month of October.
You were talking about the European market earlier. I'm a bit curious on that market as well. You write that you're affected by negative price developments here. Can you explain this a little bit more?
Yeah, the market remains very promotional, very subdued here, and the construction market has not been bouncing back. We truly believe that, I mean, thanks to the low interest rate we see in the region, it may bounce back in the future and that it has been reaching bottom now. But in all fairness, I mean, we did not see any signal of a recovery at this point of time. So very promotional. I think we have been gaining market share with the Electrolux and AG brand, which is our main objective. We're not playing in entry price points here. So we're really betting on the value and the strength of our brands and products in the market.
And something that is affecting you on all your geographical markets is, I mean, the competitive pressure. Can you explain how you handle the competition out there?
Yeah, I think we're very proud about that. We're leading in terms of consumer C-star rating. Our customers are really welcoming the new product we have been introducing in the last month here. So really, we are very glad to say that, I mean, we do have product leadership in most of the product category, and that's why we are a selling product. We have very strong brands with Electrolux, AG and Frigidaire in North America. So price pressure is pretty big because we have a big cost difference between Asia and Europe. We are not really fighting into the entry price points here. We are much more looking at being close to the end consumer and offering the best product for what their needs are.
Yannick, I also want to hear your view about the company's financial position. I noticed a net debt in relation to EBITDA at 3.5 times. I mean, we've heard some concerns that you need to raise more capital. So could you please tell me your view on the company's financial position right now?
Absolutely. Our main focus is on delivering the profit at year-end here. We have been investing massively in our industrial footprint in the last year, so we have a high level of depreciation and amortization here. So focus is on EBITDA, and we are working quite hard on reducing the level of working capital. You probably noticed as well that, we were able to save some of the capital expenditure we have as well for the year. So a big focus really on getting the cash flow we need for year-end and basically improve the leverage we do have.
We will surely be focusing on that as well. It will be interesting to follow you there. I have one last question for you, Yannick. I noticed that you have reduced your outlook for capital expenditure in this report. What can you tell us about your view on the short-term future here?
No, absolutely. That's a good point. I'm happy you're asking the question here. We are not delaying any program. We're not postponing any projects here. We just have been making quite a lot of effort on buying better the equipment we do have today and being more efficient in the industrial purchase. That's about it. No, again, a trade-off in terms of product launches here. So we're glad that we are able to reach basically this lower capital level for 2025.
Thank you very much for joining us, Yannick Fierling.
Thanks, Amika. Thank you very much. Have a good day.